All right. So it is just after 6, so I'm going to go ahead and get our event started tonight. Hi, everyone. Thank you for joining. My name is Kayla, and I will be the host for tonight's First Time Homebuyer virtual event. I want to start off by thanking all of you for joining us this evening. I know it's a pretty day outside, so we really do appreciate you guys taking the time to be here with us tonight. We hope that you find today's presentation to be helpful and informative as you go along your home buying journey. Before we begin our presentation today, I have a few housekeeping details to go over. Tonight's event is being recorded, so we will be providing this recording to you after the event. Tomorrow, you will be receiving an email that will have the event recording along with your closing cost coupon and other helpful resources for you as you go on your home buying journey. If you have any questions throughout the presentation, please drop them in the chat and you can send those to First Federal Lakewood. We will be having a Q&A session towards the end of the event, but we'll also try our best to answer questions as they come in throughout the presentation. Thank you to all of you who have already submitted questions when you were registering. We did receive a handful of really great questions that we'll be answering throughout the presentation as well. Next, I would like to introduce you to our 4 panelists this evening. First off, I would like you to meet Caroline Purcell. Caroline is a mortgage loan originator here at First Federal Lakewood. She has over 25 years of mortgage experience, and she has been with us here for 21 years. Next up, we have Marina Fiorello. She is another one of our mortgage loan originators at First Federal Lakewood, and she has been working with us here for 4 years. Also joining us today, we have John Dyer, who is the president of Nova Title Agency. He is an attorney and a title agent. And last but not least, we have Sean Solar, who is the owner and operator of On Deck Home Inspections. He is a trained and state certified home inspector who has a background of 25 years as a firefighter. One last note before I hand things over to our presenters today. While all 4 of our panelists are really great resources for you on your home buying journey, we also want to encourage you to look around and compare rates, products, and even personalities of the people that you are working with to make sure that you find someone that you are comfortable with. I know everyone here is more than happy to assist you and would love to work with you, but we also want to make sure that you find someone that works with you and works best for your needs. As one final reminder, if you have any questions throughout the presentation, please drop them in the chat and send them to First Federal Lakewood. With that being said, I am going to hand things over to Caroline to get us started today.
I almost forgot to unmute. Thank you, Kayla. Hi, everyone, and welcome. Thank you so much for letting us be a part of your home buying journey. I am going to cover information about the pre-qualification and application and pre-approval process. And then I'm going to follow that up with some basic information regarding loan estimates. You're probably wondering, as a first-time homebuyer, where do I start? And we would recommend that you would start with your mortgage loan originator so that we can determine if you're financially ready to purchase a home and what your price point is and what product will be best for you. These are very important key factors that your realtor will want to have prior to, sorry, my dog, prior to searching for a home with them. So when you are looking to begin that pre-qualification and pre-approval process, some of the key items that the loan originator is going to need from you and collect from you is 1, your income and employment history. We are looking for consistent and stable income. And if you're not employed, I'm so sorry. If you're not employed, then we would need some other proof of income from another source like retirement, disability, things like that. So just to give you an example, we do work with various types of income. Just want it to be consistent. Another important thing that your originator is going to want from you are your assets and plan for your down payment. For a conventional loan product, you can put down as little as 3% as a first-time home buyer. And a lot of people may not know that. When you put down less than 20%, you are going to be required to pay private mortgage insurance. This is a sidebar. And we'll get into that a little bit more when we talk a little bit about the payment. Another important thing that the loan originator is going to ask you for is pull your credit report, and we're going to review your score and your history. Your minimum credit score for a conventional loan is required to be at least 620. And then we look at a lot of things, but the last key factor would be, we're going to look at your debt to income ratio. This is going to be determined by totaling all of your monthly debts compared to your monthly income. What would be included in your monthly debt is going to be your new house payment. So that would consist of your principal and interest payment, your homeowner's insurance, your property taxes, and your private mortgage insurance, PMI, if you do not put the 20% down. What else we would consider in your monthly debt would be anything on your credit report, like an installment loan payment, so a car loan or your student loans. Your minimum monthly credit card payments will be included in your monthly debt. And then just to touch on your student loans a little bit, because I think that was a question. If you do have student loans and there is a payment reported on your credit report, we will use that amount. If you are in deferment or forbearance, then we will use 1% of the unpaid balance. And sometimes we can use 0.5%. That will depend on the product that we use. And one other thing about the income or the student loans is, if you are on an income-based repayment and don't have to pay anything, we may be able to use a zero payment for the student loans. So once we have all of this information, and you qualify, we will give you your pre-approval, and you can start shopping with your realtor for a home. And once you are under contract with the seller, we will start your formal loan application. We will at that time send you your initial loan estimate along with all of your other initial application paperwork. And then you'll sign your intent to proceed, and we'll move on to processing, which Marina is going to talk a little bit about that later. And then I'm just going to go right into the loan estimate and give you some very basic information about that. When you are applying for a loan, and even when you are getting your pre-approval, many loan originators will share with you a cost breakdown for everything that will be associated with your mortgage loan. So when you're formally applied, you will receive a loan estimate. I break those down into 4 different types of fees. You will have your lender fee, which for us would be First Federal of Lakewood's lender fee. I'll throw it out there, $9.99, because I really think it's a very competitive lender fee. The other fees that you're going to have are your third-party fees, and these are going to be like your appraisal, your credit report, your tax certification, and things like that. Then you'll have your title fees. The title company provides a lot of different services. Your title company fees are, well, I'm not even going to give you the total because I think it's too much information. On a scenario of like a $250,000 loan amount with, let's say, 10% down, your total closing costs will probably be around $4,300. And then you will also have prepaid items. I'm going to say, once you're ready for a pre-approval and doing that should be explained to you in detail. But I will say prepaids are different from closing costs. They're to set up escrow accounts to pay taxes and insurance through. I find that it's one of the most confusing things to understand as a customer. applying for a mortgage. So that's a one-on-one thing. So I think that covers everything that I'm to go over. And I think we're opening up for questions at the end.
Correct.
Okay. So next I'm going to introduce and hand it over to Sean Solar, who is our home inspector here with us today. Sean?
Hi, excuse me. Hi, everybody. Again, my name's Sean Solar. I'm the owner of On Deck Home Inspections. Total employees is 1. So when you call, I will answer the phone for you when you do call. And if you have a problem, I'm going to be the one to handle it. So you're not going to get multiple people with multiple different answers. You're going to hear it right from the source, and that's me. So one of the things that you need to caution yourself with when you're buying a home is make sure that your home inspector is state certified, and they're licensed in whether they're doing a pest inspection, if they're licensed in radon, and with all that, you want them to be insured, because if something happens, whether it's 2 years down the road or 2 months down the road, you want to make sure that whoever you use is licensed and bonded. That protects you. And then you also know you're working with a good company. And I pride myself on that. You did hear my background. I was a firefighter for 25 years, full time. And I also did construction, and I still do some of that on the side when I'm not busy with the inspection business. But just how do I get involved is a very important question for you as a first time home buyer. And there's a couple different ways. Number one, you're going to like me so much tonight, you're going to write my name and number down, and you're going to call me when you buy a house. The other way is a realtor will give 3 home inspectors, and then you have to do your due diligence to choose the one that you want. And I always say, even anything that you do, you want to read reviews, you want to do a little bit of background on them, and make sure that you're comparing apples to apples. So that's very important. Um, so once I do get involved, the inspection total time is going to take anywhere between an hour and a half to sometimes 3 hours, depending on the homes. I do small homes of 1,100 square feet, and I've done $7 million homes that are 15,000 square feet. So regardless of how big the house is, you want a home inspector that's going to be thorough, give you a thorough, detailed report that you can understand as somebody who maybe isn't in the construction field, is not handy. You want that report to be very detailed, easily understood, and more importantly, you want to be able to reference that report in 3 years, because when you use a good home inspector, they're going to give you information. They're also going to give you some maintenance tips that can save you money down the road. So that's very important also. Um, so I check, and any home inspector, they're going to check the outside of the house, and I'm going to check from the top of your chimney all the way down to your basement floor. One of the things that I use that not a lot of inspectors use is I use a drone, and that'll help me get to the highest point of the house, and that's your chimney. And as you know, that can cost thousands of dollars if small repairs are not taken care of. And then I go all the way down into the basement. I'm checking your foundation, air conditioner, furnace, and probably the most common thing that I find are electrical problems. And as you know, electrical fires are in the top 3. I want to say it's number 2 in house fires, next to kitchen fires. So, that's something that, you want somebody who's going to be who has seen issues before multiple times, and can tell you in regular terms, what a double tap is in a breaker. It's not the end of the world, but we want to get it taken care of sooner than later. And the important thing too is for the home inspector to give you, I want a licensed electrician to make that repair. You don't want somebody's uncle to make a repair, because then you don't know if, um, you don't know the workmanship. Uh, so that's another thing I stress. But trying to think what else I wanted to say. But so, with the current environment, sometimes people are not getting home inspections. I don't recommend that, obviously, because I'm a home inspector, but I do see that now, and I am doing home inspections for people that move into a property after 2 to 3 weeks. They made the deal with no home inspection, so they call me 3 weeks later. I come out, do the home inspection, and I was telling the group before this all started, I did a house in Avon Lake about a month and a half ago, 2 months ago now. It was about a $400,000 house. The lady told me she overpaid by 40,000 on her bid, which is not uncommon in this environment. And she had about 30 to probably 35, $40,000 on a good day of foundation issues. So she basically is going to be digging into her home equity line, or however she decides to pay for that. But I stress to get that home, not the home, but the home inspection prior, so you know exactly what you're buying, and there's no hidden surprises for you when you go in um, as the buyer. So that's pretty much it. And I will obviously take questions at the end if there is any. And I'm going to introduce Marina.
Marina, you are still on mute.
Oh, I'm sorry.
There we
Okay,
go.
let's start again. So I'm Marina. Thank you, Sean. I'm Marina Fiorello. I'm one of the other mortgage loan officers here at First Federal Lakewood. So I'm going to go over the appraisal with you. So once you have completed your inspection with Sean, we will go ahead and we will order your appraisal. The cost is anywhere between $450 to $575. The borrower typically is required to pay for the appraisal. Basically, the appraisal is completed by a licensed appraiser who will use home sales within the past year that are comparable to the home that you are purchasing. So for example, if you're purchasing a 2-story home, a condo, a ranch, of course, they will give value comparable to those properties that have been sold within the past year. Now, if you purchase a condo, we'll reach out to the Homeowners Association and we'll request a condo questionnaire. A condo questionnaire basically asks specific questions that have to pass the underwriting guidelines, such as the project, how many units, etc. So the condo questionnaire has the way those questions are answered is very important, especially when the loan gets into underwriting. They have to be pass our underwriting guidelines. And John Dyer, would you please explain the title and the process and a little bit more about the condos?
Yes, my name is John Dyer. I'm with Nova Title Agency. We have offices in Seoul and in Worcester, Ohio. So welcome. The title agent is kind of like the quarterback of the transaction. We're in the middle. So when you sign your contract to buy the home with your realtor or from a family member or however you execute that contract, that will list that there is to be a title and escrow officer or agent. And so you would list Nova Title, and then we will receive that order from the realtor. We will order a title search of the property, and that search usually goes back through the county records 50 or 60 years. And we do that because at the end of the transaction, we are going to issue to you as the buyer an owner's policy of title insurance. And what that essentially means is if anyone ever challenges your ownership interest, that's our responsibility. We are obligated to pay any claim that they would make or defend any challenge they would make to your ownership interest. Similarly, we will issue a policy of insurance to your lender. So if you buy a home for $100,000, we would issue to you an owner's policy in that amount. And if you borrow $80,000, we will issue a loan policy of title insurance to your lender. After we get the title search back from our title examiner, and we have some examiners are in-house or work for our company, others are outsourced. We get that search back, we prepare what's called the title commitment. And that's basically a history report of the property. And that document will list out the current owner of the property, the seller, you as the buyer, the purchase price for the home, the loan amount. We list the legal description, any mortgages on title, any judgment liens on title, the amount of the real estate taxes. It basically has all the relevant information in the contract or in the that affect the property in the title commitment. We'll send that to you. We'll send that to the lender. And then at that point, we work with the lender to go through resolving any legal issues there may be relative to buying the property. So those really relate typically to the seller, sometimes with the buyer. Part of what we'll do is we will identify if the property is a condominium or a townhome, which would indicate typically that it's part of an association. So when you buy a condominium or a townhome in some type of a planned community, there will be an association that is a legal entity that's typically managed by the people that own property in that area that are part of the association, and you pay monthly dues to that association, and the association is responsible for a repair of roof lines, sometimes air conditioning and heating, the maintenance of the grounds and maybe a pool or tennis court or something like that. So the association, those documents will be reviewed. We'll discuss them with the lender, and the lender will ultimately look at the association documents to make sure that everything can be approved through their underwriting process. Thanks, Marina.
Okay, thank you, John. So now we're going to move on. You've given all your required documents, your bank statements, income documents, etc., to your loan officer. The loan officer will submit these documents to the processor. And what the processor does is he or she will make sure that all the required documents that are needed from the borrower are in the file. Processor will order the title. They will verify employment, verify tax documents, and order your homeowner's insurance. So please get a homeowner's insurance quote from your homeowner's insurance agent. Typically, homeowner's insurance is required to be paid upfront full for 1 year at closing your loan. Typically, that is paid at closing. So you'll have to get a policy which show what your premium is there. Once the processor has received all these documents and reviewed them, then they will move the file along to the underwriter. And the underwriter reviews your credit history, outstanding debts, your bank statements, title, condo questionnaire, if there is one that's required. And the underwriter will either approve or deny your loan. So we're just going to assume that everyone's going to get approved in this stage here to move on when the loan officer receives the approval from the underwriter. A lot of times there are pending conditions. Those pending conditions can be typically they're waiting for an appraisal, or they're waiting for or appraisal or title work. The underwriter may need an updated pay stub before submitting the loan over for clear to close. Once the loan is sent over, once the underwriter approves the loan, then she will submit the loan over to clear to close. Kayla, can you, yes, here, no, wait a minute, let me see. Yes, we switched the slides here, I'm sorry. Okay, so I'm just going to move on here with, can you go back to the closing costs again? I'm sorry.
That's okay.
This page, I'm so sorry. Okay, so once the underwriter approves the loan, and the conditions are met, the processor will send the file back again to the underwriter for what we call clear to close. And the underwriter will clear to close the loan file and then move it over to closing. And Caroline had touched on this earlier about the closing costs. So the other closing costs are origination that she had gone over, which is $9.99 for First Federal Lakewood. We have appraisal fee, tax service fee, government fee here. So typically, in addition to your down payment, you're going to need an additional anywhere from 2 to 5%. Many times for first-time home buyers, and you can discuss this with your real estate agent, you typically will ask your real estate agent to ask the seller to pay for a certain amount up to for your closing costs. And once the underwriter sends the loan to clear to close the loan file, your mortgage loan officer will reach out to you again and say, congratulations, your loan has been cleared to close. And we'll go ahead and move the file along to the closing department. At that point, you will be sent a closing disclosure. That closing disclosure has to be signed and dated before midnight the day that it's received, because it is required to be sent out to the borrowers and acknowledged 3 days prior to closing. So you want to make sure, it's very important. Of course, your loan officer will let you know when it's sent to you, so you don't have any delays in your closing. And I think that was it. John, are you doing the other one? Or you're
Yeah,
done, or you're
let me
doing the,
jump
I'm
in.
sorry, the
So let
signing
me
and the
jump in.
closing?
When the lender completes the closing disclosure and that's sent to you at around that time, the lender will reach out to us as the title company, because we will be the ones that will be meeting with you and your spouse to sign all of the documents at the closing. So basically, we will contact you, and oftentimes you'll meet at our office. We often meet at a local branch of First Federal Lakewood. We can meet you at home. We sometimes meet one spouse at one work employment place, sometimes another. It just kind of depends. We're a service business, so myself and other title agents will try to make it as convenient for you as possible, with the understanding that to get the closing done by the closing date, which is always set by contract, and that we're all as a group working towards accomplishing the goal of closing on the day that's been set in the contract. That's what we try to do. So sometimes we'll need to, a little cooperation from you, of course. But the thing to remember is when you get the closing disclosure, that will tell you exactly what is due, how much money you're going to need to pay for your down payment, and it'll be to the penny. And it may change by a few dollars, but typically it doesn't at that point, because we've really honed in on that number. And so one of the things you need to know is, under Ohio law, any amount of money you bring to the closing in a real estate transaction over $10,000 has to be sent to the title company by a wire transfer. So most people have never done a wire transfer. I hadn't until I got into this business. You basically have to go to wherever your funds are and talk to a banker and go through a process to either fill out a form. Oftentimes it can be done online, but it depends on your financial institution. So it's something that as you're going through the process, be aware that at the end, you'll have to send a wire transfer if it's over $10,000, and you should ask your institution what their protocol is. There are times when people bank out of state, and so they've got to kind of work that out in advance. So again, we'll make an appointment to meet with you. We will have, on behalf of the lender, we'll have the closing disclosure, a promissory note, a mortgage, a first payment letter, an initial escrow disclosure statement, which tells you when, assuming you're escrowing, when for the payment of taxes and homeowners insurance, when the bank will pay that on your behalf, and then a host of other documents. And everyone will joke with you, oh, bring your stamp, bring your pen, do your exercises with your wrist. It's kind of the joke people say. It's really not that big of a deal. We go through, myself and all title agents will go through every document. We'll make sure you understand it. If something doesn't make sense or you're concerned about something, we can always call the bank to determine, to verify what any questions you are. I'm an attorney. There are many title agents are also attorneys. Typically a title agent either has an attorney or they have somebody on staff that can help you understand the paperwork, because as an industry, we're heavily invested in you knowing exactly what you're doing, exactly what's expected of you throughout the course of the closing process. We all understand that it's complicated, that it can be confusing, that so, we're here to help. That's the one thing I want to say. The title agent and the lender are here to help, as is the home inspector and everybody else and your realtor that are getting involved here. So eventually you'll sign all the papers. We as the title agent will have already signed the seller. So we have a deed from the seller to you. We will come back to the office. We will scan a host of documents over to First Federal Lakewood. They will fund the loan by sending us a wire transfer in the amount of money that you're borrowing. We will combine that money with the money that you've wired to us. And then we will have all the papers down at the county. We'll do a final update of title, and our person at the county will file the deed, file the mortgage, and that's when you are the owner of the home. When that stamp from the county goes onto that deed with an exact hour, minute, and second, and that's when you become the owner of the property. And then we're notified of that fact. We'll let the realtor know or call you directly, and you can arrange to go get your keys. And then after that happens, you'll be notified by First Federal Lakewood of, you'll get a welcome package to start making your payments. So that's kind of the very end of the process. That's the fun part. You get the keys and you can go over to your new home that afternoon.
Awesome. Well, thank you so much, everyone. I know that was a lot of information. So again, if anyone has any questions, please send those over to the chat. We have had a few questions come in, so I'm going to start working through some of those, but if you have any more questions, feel free to send those over as well. The first question that we have is, for someone looking to buy a home, what is the best first step that they can take? And I'll leave that open for whoever wants to answer that one.
Find a good realtor.
Caroline,
You can always find a realtor first. It doesn't, and your realtor will probably give you referrals to check with the loan originator. But really and truly, before you start shopping, the first thing that you want to do is get a pre-approval. So you would want to talk to a mortgage loan originator, me, Marina, anybody. We have a whole bunch of people on our team that will help you determine what you can afford, and again, if you're ready, and those are things that your realtor is going to want before they start taking you to homes and before you can put in an offer on something, because you have to submit your pre-approval letter with your offer. So I would say start with us.
Perfect. Our next question is, I don't have 20% to put down for a down payment. Are there loans or are there other options that are available to me?
yes, that's a great question. Can you hear me?
Yep.
Okay, that's a great question. You do not need 20% down. There are a number of programs out there. As Caroline said, get your pre-approval first. Once we see the mortgage loan officer, Caroline or myself, see where you at as far as your credit score, your ability, there's a number of programs, down payment programs you could do. You could do either 3%, you can do as little as 3.5%, 5%. So no, 20% is not required.
Perfect. I know another question that had come in previously is, are there any first-time homebuyer programs available?
Yes, there's several first-time homebuyer programs available. And to go back to the other question, I'm sorry, if you're a veteran, you typically don't put any money down either. So if you're a veteran, that's zero down payment, which I'm assuming you may or may not already know that. But as far as the first-time homebuyer programs, there are several available. The biggest one that everyone is aware of course, is the OFA, which is the Ohio program through the state of Ohio. There's first-time home buyers, there's Ohio Heroes. There's Ohio Heroes is for teachers, firefighters, policemen, firemen, EMTs. There's also grants for grads. So if you've graduated with a associate's, bachelor's, master's degree within the past 4 years, you can get down payment assistance anywhere from 2.5% to 5%. You could use it towards your closing costs or your down payment. There's also a program through Welcome Home Grant, which typically comes out March 1st, and those funds are $5,000. You could use them towards a down payment and your closing costs. And these down payment programs, they have income requirements as well. So just check with one of us and we will help you with what those programs are as far as if you qualify for the income level that you need to meet. Also, there is one of the programs here in Cleveland and Cuyahoga County. They will help with the down payment assistance program as well. But that one in particular, the one that's through Cleveland, Cuyahoga County, you have to make sure you start that program before you start looking for a home. So that program's a little different, and myself or Caroline can give you more details on that program as well.
Awesome. One more question that we received was, on average, from beginning to end, what does the timeline look like when you're buying a home for the first time?
So if we're including the pre-approval process, I am going to say that it's longer than normal because the inventory of homes for sale is so low right now. I have never had to renew so many pre-approvals. Normally a pre-approval is good for 4 months because that's how long your credit report is good. And usually I would say you get a pre-approval in a typical time, you buy a house and you close within that 4-month period. Right now, because it's such a challenge, but if you find a good realtor, you'll get there. But then from the time that you start your loan process, where you're applying for a formal loan application, so you're under contract with a seller, I would say that takes 30 to 45 days.
Okay. And looks like we have one more question that has come in, and it's kind of two questions. How do I find a homeowner's insurance agent? Is it similar to my car insurance agent?
Yes, you typically what I tell my borrowers is to start with your start with your car insurance. Because when they call it bundling, I'm sure you've probably seen the commercials on TV to bundle. So when you have your car insurance and your home insurance together with the same agent, same company, they typically give you a discount. So I would at least start with them first. And then you can also, once they give you the quote for your homeowner's insurance and you see how much of a savings you will have on your car insurance, then you can go out and once you have that quote, you could go out if you want to search around to other places, other insurance companies, and ask them how much your homeowner's insurance would cost if you included your car insurance as well. So that's where you typically want to start first. Some first-time home buyers who have their car insurance under their parents' insurance. So then you can go and reach out to their insurance agent as well.
Lovely. Thank you both for answering all those questions. It doesn't look like we have any more questions at this time. So now we have some free resources that we just wanted to bring to attention that are really great as you're starting your home buying journey. So these are available to you, as I said, some great free resources. So thank you so much to all of our presenters today, Caroline, Marina, John, and Sean. It was a great presentation. Thank you all. As mentioned at the beginning of the event, everyone will be receiving an email from us tomorrow with the recording of the event, your closing cost coupon, as well as a few other helpful resources for you on this home buying journey. If you want to access more of our home buying tips, please follow our social media accounts at First Federal Lakewood. You can also visit our website at ffl.net. There are tons of great tools and resources available for you. We want to wish everyone good luck on your home buying journey. And as long as there are no more questions, thank you again for joining us this evening. Have a great rest of your night, everyone.
Thank you.
Thank you.
Thank you.
Thank you.
Doug, you are still on mute.
Nice
There
job,
we go.
guys.
I think
Thank
we
you,
had
Doug.
two, what did we have? Two people?
We had
Three.
three.
I think we
It
had three.
happens. Yeah.
We had three,
Oh, that's a bummer.
We had
We
three.
had three.
but that's
That's
okay. We have
Three potential borrowers.
exactly and 14
Yeah.
other people or 15 other people that we can reach out to share this information with.
Yep.
Exactly. We have their information now.
Caroline, my first CE class I ever did in person, I had 5 people. I was so excited and came all prepared. And of course, it was in front of a studio audience and one person. I did the class for one person.
That's funny.
I did one once down in Worcester, and it was with this one realtor team, and like 2 people showed up, and we were in the back ready to go on, and none of them were willing to do it. They just didn't want to do it because they were embarrassed. I'm like, the show must go on, guys. Like, haven't you watched any movies? We don't have a choice. We have to do it. We bought the
Well, this
food.
was my first virtual. I've done them in person before, but never virtual. And one time we had nobody show up.
Yeah.
Oh, really?
And,
This is my first virtual.
Yeah.
Before we all jump off here, any quick feedback, thoughts, suggestions for next time? Hopefully next time we can do it in person, but this isn't a bad option either.